Good morning, everybody. It is Wednesday. Man, look, it's been a long week. Okay, I mean, not a whole lot has been happening. Hey, and I'm off. Okay, let me show you the charts. So, some interesting stuff actually happening this morning. So, first of all, you got to remember we got like GDP coming up here. Okay, but S&P 500, within the range in the overnight market, but more recently here we're getting some bender of a move. Starting to move down quite a bit. Treasuries got destroyed yesterday. That was so much stronger of a move than I was anticipating. Now, with that said, we're kind of coming into some technical levels where, I don't know, maybe we see some bounces. Can we get lower than that? We'll see. And also, the yield curve is steepening back up again, so that's good. But pretty big change in there. Oil, good day yesterday, man. I tell you what. So when you look at it over here, it's well, okay, yeah. When you look at it like in the indexes, like USO and stuff, it's like this is a crazy movement. Okay, natural gas still on the upswing. I don't know if this is going to break out higher, but man, it sure looks coiled up. If it goes up, it could go up, yeah. Gold still kind of in doldrums. I mean, that was a really strong move up, right? Retracement, maybe. Okay, fine. Copper's doing good. Ooh, copper's doing really good there. And over here in the currencies, what do we got? Dollar index looking a little weak today, huh? Not breaking 96 yet, but it's looking a little weak. And then Bitcoin, as a result, is... Oh, no, wait, that's not right. There we go. I was like, what? I thought something seemed a little off. Yeah, okay. Bitcoin is maybe being affected by the dollar a little bit, but it seems like it's okay. I think that we've got some more instruments to roll over here, don't we? Oh, no, just soybeans. Okay. Well. Anyways, so that's where we're at. And then we're going to get the GDP numbers here coming. So US GDP quarter over quarter final, we're looking for a reading of 2.1% with a previous reading of 2.1%. So, and we really want to pay attention to those US core PCE prices, which the forecast is 4.5%. Okay. Good morning, Stephen Ray. How have you been? I haven't seen you in a few days. Probably been longer than a few days, but hey. Coming through here, checking Twitter and stuff. Nicholas Nassim Taleb talking about diets now. So he posted a video the other day talking about, statistics. And, he was saying maximum drawdown is a really important metric to look at. And I was like, yes, it is. Oh, okay. You got that data to load from IB API finally. Yeah, what do you do with it? How is the machine learning? Not very well. So like the thing is I got like the basic thing working, and I went and I read some stuff about TensorFlow, of course, but none of it really seemed like I wasn't immediately like, okay, let's try this and let's try this, and so I'm not quite sure what to do to it to actually build it into a strategy. There's a lot more that I'm gonna need to learn. Hopefully today, well, let's see, what do we got on my list? We took care of the website. By the way, I could really use some feedback on the website. So if you guys make sure you go and check out speculatorseth.com. We did change the indicators over so that it's a one-time purchase of $100. By the way, 1 minute left. And I do want to get more into my statistics book here. Well, it's not really statistics, it's probability and random processes. I want to get more into that. I feel like that the machine learning thing is something that there's going to be there's going to be a steep learning curve, and there's going to be a lot of stuff at the beginning that I need to learn. And I'm probably going to learn a lot more stuff than I need purely to make a machine learning algorithm. So it's okay. I got to think long term, right? All right. So here we go. That was interesting. The 10-year, somebody hit the 10-year there. Somebody's betting in short. Okay. So the GDP is a little bit better than expected. Give me that PCE. Or spot 6. Okay, so did you see there when the PCE came out, it was a little bit delayed from the other ones, but when the PCE finally came out, the treasury sold there a little bit, but it was only a little bit. It was like some robot took a trade in there, maybe not considering how light the liquidity was. So even though it moved down, and I do think that the net effect from this uh, news that we've got, because the PCE was slightly higher than expected, it is, slightly bearisher treasuries, but only mildly so. Only mildly so. And probably we got more movement in the 10-year there than probably is deserved. But I tell you what, whoever sold 11 contracts at 1.474 in the 10-year is probably a little bit unhappy at the moment. Maybe we can move up a little bit and squeeze him. Maybe they're going to be nice to him. Maybe they should be nice to them, because if I was in that trade and there was only one contract, I would be hoping that they'd be nice to me, right? So, does it have visual learning? Well, you can do visual learning with TensorFlow, yeah. Or at least that's my understanding. I don't know how it works. I really don't know how it works. There is just I am a little overwhelmed by how much there is to learn about this subject. I really thought that I was going to come in and it was going to be something that I was going to spend years learning, but that I would be able to come out of this break with something to show for it. And I don't think that that's going to be the case anymore. But maybe today we will be able to find some, do some videos and do a little bit more searching, because I think part of my problem here is that I'm taking a bottom down approach, like trying to learn everything about TensorFlow. It's like I kind of understand the framework now, but we really need to go in and see if somebody's made like a quick guide sort of a thing. Yeah, well, I'm a computer science guy, right? I did do machine learning algorithms stuff in school. I just don't know the algorithms that I was running were not neural networks, right? And that's what I want to do is what's how do you use a neural network in regards to reading the DOM is I guess the key here. They're moving down a little bit. I think we should be careful. I mean, 1.48 isn't necessarily bad if we wanted to go long. But I do think that there's a good chance of it trapping us here. It's either going to go and we're going to have another bender of a day, or it's going to like trap us here. And I'm kind of leaning more towards it, trying to trap people. Let's see. Oil is getting a bit of a move here. And we did see off of that news the dollar did get a little bit weaker. There's still like 96.20, so nothing too significant yet, but it could yet turn into something big. So we want to keep an eye on the dollar. I'm always forgetting about that, kind of leaving the dollar alone over there, but we need to keep an eye on it. But I don't know. I spent a lot more time watching kids than I anticipated, especially last week. And then I spent a lot more time working on the stream than I anticipated. So what I did most of yesterday was just like writing my script out. The next one that I have on current conditions, like I know the concepts that I want to kind of share, but like I keep running into either like I go way too far into one particular thing, or like I just don't know how to connect the ideas together. So I've spent a lot of time trying to write that script for that too. The good thing that I have that whole time period to work on it. And I'll probably spend more time on that next week. So probably that'll be all on that for this week. I'm not sure. I'm not sure how that works. Can you just go and give it the DOM? Of course, how I split the DOM out would be an important point, and maybe some of my filters putting in there too. But then what? And then you tell it make the most money, and you let the neural network do its thing. And I don't know how that works, to be honest with you. Really don't. Still in the very early stages of that. It took more work than I thought just to even get all the software running on my machine. So I'm noticing, like when I look at the chart in the 10-year, kind of looks like it's in an uptrend. I'm kind of wondering if we're not going to have pull back here. I think in this with this big trade up here, like I think there's enough of a chance of it going lower that I want to keep my size on. I have given myself a little bit of room. So if we get another big move back up to like where our cost basis is, we should be able to add on again. When I think of machine learning and trading, I think of TA. Well, I think it is kind of TA, right? Let's just remember that um the theory here is not that machine learning cannot work, but that technical analysis is not that technical analysis cannot work. It's that it's a very difficult to find an edge with technical analysis. So if we were going to find an edge with technical analysis, going in and doing something really complicated based on statistics and machine learning would be more likely to lead us to results. And if it doesn't lead us to results, it may still yield some usefulness that kind of, you know, might keep us out of bad trades, right? Although I do kind of wonder after looking things through. So let me show you something. This is kind of interesting. We'll try doing a couple of different things. I'll just kind of continue with some of the investigations that I was doing yesterday with you guys because I don't know if we're actually going to be able to take many trades here today. Okay. So if I come in here, let's make this data series be a little bit bigger. Let's give it like 30 days worth of data. Okay. And then I want to come in and I want to show the standard deviation of I'm going to change this and we'll change it to range tick. So how many ticks there are in the range? Okay. And there you go. Okay, so it's very much changes through the day because we have a pretty tight within a day frame. But do you see how the standard deviation is actually like relatively keeps coming down to this lower bound here at 8. So let's change that. Now, I think that the real risk with machine learning is that you're going to end up with an algorithm that you don't really understand. So how can I sit down and say like it's going to continue working into the future? It's not. We're likely to come into a drawdown and anything like that. You know. Okay, let's try 50. Okay, that's a little bit better. Oh, even with 50, it's kind of mad. So maybe let's change our data series just to like our trading hours. This is these STH2. I think would probably be a little bit better. Huh. Well, you do get some relatively large changes. Machine learning is a field of I think you could say that. If I come to like 5-minute periods, it's like yeah, there actually are some pretty consistent periods here, right? It seems to me uh, like the reason I find this really interesting is like how far the range of an individual bar is does seem to follow some statistical patterns. I wouldn't say it's all statistics, right? Like there's a lot of computer science algorithmic magic at play too, right? Anyways, uh, it seems to me like there is like if you were going to go in if you're going to do technical analysis, that it makes a lot more sense to s- the technical analysis of volatility than it does the technical analysis of price alone, right? And when we're talking about what is the technical analysis of volatility, well, volatility is just how much it's moving. So we could say that the range of a 5-minute bar is one measure of volatility, right? One measure of volatility. And when we start to look at that, we start to realize that there actually do appear to be some consistencies in the range. So we come back over here, adding our range histogram. Probably a good right. So most bars are in the 15 to 16 range, but it goes all the way out to like 34. Man. Part of the problem here is that it is just like to really get yourself outside of the noise, you've really got to take on a lot of risk. Yeah. But there's a pretty fat-tailed distribution to it. Most of the data points fit in here. And so like these things like a Bollinger Band is kind of silly to think about. doing a Bollinger Band. It makes way more sense to just come in and do let's just do a regular Bollinger and oh, actually we can't do it with that one. Lizard indicators. MA multi-Bollinger. Mid-band period 1. And then the deviation period, we could make something like really large, like 50 or something, right? And the deviation multiplier only be 1. Okay, and then don't show paint bars or floods or any of that. Okay. Oh, that actually did not do what I thought it was going to do. How did I get it to do with this before? So the mid-band period there, that's right. Now maybe 50 is just too far. Yeah, okay. Oh, I see. Because what's happening is the switch is making it too big. Okay. The switch is making it too big. So let's change this back to instrument settings here. Okay. And that kind of smooths that out. Okay. So now, and then let me change the let me change it so that you guys can actually see the lines on here. I really like cyan. Cyan is a color that underrated color. Okay. And also, can we change the deviation period to be more like 20, for instance, now? Yeah. There you go. Okay, so now you kind of get this thing like, okay. With Bollinger Bands, you'll end up with these periods where like it's moving up. Here, let me put the regular Bollinger Bands on too. Yeah, we'll do it that way. Okay. So we got like I'm using a period of 20 on that one. So let's just come over here and put regular Bollinger and set that to be 20. And we'll even do 2 standard deviations. Okay. So here is your ye old regular Bollinger Bands with a 20 period, right? And you're going to get like all of these bars where this one is above the band, above the band, above the band, above the band, right? So the whole thing is you're using statistics to say how far should price deviate from the mean. And I'm saying how much price deviates from the mean is meaningless. It doesn't really tell you anything because once price moves, the stock like remembers that price. So you can't expect it to, like, why should it come back to the mean? It doesn't care. Only if people are trading it does it care, right? But the volatility alone, the range of the bars, how much range you're actually trading does seem to be extremely consistent. It's extremely unusual to get a bar that moves outside of these cyan bands. And look, when you do get it to move outside of those cyan bands, like for instance, right here, it gets pushed back into the channel almost immediately. Yeah. That seems like something that would yield much better. Hey, you know what? Let's just freaking backtest it. I mean, the treasury's moved up. So I was kind of sitting here being like, maybe they're going to trap us. They did trap us. I don't think that I wanted to trade that. Not yet. I kind of wonder how far this is going to move us. that news was not explicitly bearish in treasuries. I think somebody is kind of taking advantage of the situation. So I think that my call here, um, I was thinking off of the GDP, maybe something would happen and I could take a trade in the micros on my live account, but I think not. So that was probably the last chance for a real trade before the holiday. But over here in the treasury, on this one, we should just let this come up today and then maybe try and pile back onto it. Okay. So let's make a strategy here and try and backtest it. Yeah. I have a double Bollinger Band indicator I wrote that you might like. So I think that we should do this on like a like I think that we want to look at like a 5-minute period of range, but the actual algorithm should be running on more fine than that. Okay. So do I think I have one here that's like just based on, maybe it's under bands. Bollinger 2 strat. Yeah, AMA, multi-Bollinger bands, yada, 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 yada. Okay. So we're going to use this range dev, what I'm going to call it. I'm feeling really ADHD now today because I'm just, going off on something that was completely unplanned. Nah, Bollinger bands don't redraw live. They just draw at the end of the bar or, on price change. You can set it to change on price change, but. Oh, actually, it's an interesting point. Did I close that chart? I did. I hate when I do that stuff. Okay, but it will still be like at the close of the bar. Yada, 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 yada. Getting a bar where you close outside of that is going to be crazy hard. Okay, so let's just do the naive approach. I don't think that it's actually going to give us any trades when we do this. Okay. So when we're doing configure, I want to add in here add data series. Bars period dot. That's not how it works. Oh, bars period type dot. It needs to be capital E. Bars period type dot. There we go. Dot second, and let's run it every 5 seconds. Or no. This one needs to be minutes. Be dot minute, comma 5. Okay. And then in here, we're going to add AMA multi-Bollinger. And the one where we specify the input series is going to be okay. Bars array of 1. Okay. And in this case, the base period is always going to be 1. And we'll just do 10 for the dev period to start with, and dev multiplier be 1. Okay. So then if we cross above the upper band, then we enter short. If we cross below the lower band, then we enter long. We fade. Now we might need to change this to set the targets because we're going for something super tiny, right? Like maybe we should get out at the mid band, for instance. But let's just start with that. Let's just start with that. Okay. And strategy analyzer here. Oh, that's, I just read at Twitter and I know it's not relevant to anything they were saying, but you see how ADHD I am. Ed Morrissey, Biden's problem was that he entirely misread his mandate and politically wrote checks that his party couldn't possibly deliver. And not to mention that there just isn't any greatness in Biden, which 50 years in Washington, D.C. should have made clear to everyone. Asymmetric info makes good points about the historical winds of fates on presidency, but that wasn't Biden's problem. It was basic math and an ability to use it. Yeah. Washington Post columnist, Biden's timing prevented him from becoming FDR. It really is like he has like this big agenda. Well, don't even know if it's his big agenda. It's like the left wants him to do these things, and he just doesn't have enough political capital to get any of those things done. And they're really quite crazy proposals. And then the left is like just absolutely incensed when he doesn't get it. It's kind of funny. Okay. Bands, range dev, base period multiplier. We'll do that one. Yeah, we'll do that one. Mid bands, SMA. Okay, so stop and targets 1. Yes. Yes. We'll do the 5-second thing. We don't need tick replay. And let's only do December, okay? Oops. Okay. To yesterday. We'll do the extended hours for now. And we'll run. Now, does it even take a trade? I think that under those parameters, it should take at least a few. No, it did not. Oh, but there was an error. There was an error. Error calling on bar update, blah, 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 blah. Hi, my bands dot upper one. Okay, well, I'm not in the mood to try and figure it out myself. Let's just debug it, okay? Also, let's come in here and turn off that sound because it's going to be happening a lot. Okay. It may just be, yeah, you might be right. Oh, hold on. If bars in progress equals 0, so we should only do that. Does not equal 0, return. If current bars of 1 is less than 10, return. You're probably right, Stephen. As soon as you said that, I was like, oh, yeah, that's probably is what it is. I was going to Visual Studio it. I always forget that, though. It's a really annoying thing about Ninja Trader. It's like, it comes up in like every strategy. It should just like go, oh, hey, it took a lot of trades, actually. That doesn't quite seem right to me. That is way more trades than, well, okay, let's do chart here. Let's do chart here. Yeah, okay. So like that one, for instance, I'm not sure that's right. I don't know if that's right. Or that's not what I was intending. Let's see here. Oh, I'm using not fade. Then if you cross below the high, if we cross above the long, how does that, no wait, how does that one happen? How does that work? Hold up. That is just funny. That just did not work the way that I anticipated at all. And okay. And when was this? 21st at 1350? Okay, on this move. Oh, it actually did. Oh, that's interesting. Oh, because the mid band is on the close. So maybe the mid band shouldn't be on the close though, huh? So hold on a second. So instead of using ES as our input, we could try doing median. That's a little bit better. Is median really what I want? There's also typical. Forget how it calculates typical. I don't know if typical is really what you want. There's also weighted, which I think factors in volume. That one might be interesting, but let's start with median. So over here, we're not going to see bars array 1 We're going to do, is it medians of one, I think? The Bollinger Band period is a 10. That could be too low as well. You're right, but I think there's two things. There's multiple. So the first thing is just that, like, on this one, like that ended up being a buy was not kind of what we anticipated. But we probably want it to fade. But the other thing that I think is going on is, like, see right here, like, it took it a bunch of times. Okay. So we should try, we should probably put something into it that says, if you take a trade, don't take a trade until there's been another bar, right? There's been another 5-minute bar, rather. Okay. And by the way, let's switch this around so that we can kind of see how that changes things. Okay. Well, that actually made it worse, but that did bring down the total number of trades by quite a bit, which is what we wanted. Now, you were talking about the deviation period. So yeah, if we change that to like 50. That cuts down on it a lot. It's still only a 0.89 profit factor. But we're doing the wrong thing. If we change it to fade now. 0.84, huh? Oh wait, wasn't that one point? Oh, that was weird. Fade false is this one. Fade true is this one. Okay. Oh, that's weird. But I can go with that. That's fine. There's lots of different things that we can do here, right? So with equal risk reward on the long trades, it gets 48. That would just be in line with like what the S&P 500 tends to do, right? Oh, sure. If you plot 2 standard deviations, it'll be a lot. It'll be a lot more rare, right? Well, 1,000 in a month is too many, huh? Yeah, that's actually not too bad. What about 3? 3s are like really rare, right? That one was not as good. Okay. What about 1.5? 1.5 makes more sense to me. There you go. You get more trades at least. Interesting. Does seem to be vulnerable to a fat tail nature though. But some of those trades, probably shouldn't be happening, right? So let's fix that. So if bars in progress, oh wait. This should be if bars in progress does equal 0 return. Hold on. Wait. Yeah. Wait. Okay. I might have like confused myself on something important. So let's just check that. This might run something. This might do something weird. This might make it worse. Oh, hey, there you go. There you go. And 211 trades. That's a little bit more like what I was expecting. But why is it if bars in progress equals 1? Oh, because 0 is the small one and 1 is the big one. Right. So we do want it to only run on the small one. So that's why that is. So I did have it right before. But we should do this, and we should say if bars in progress equals 1. Okay. So if I take a trade, then I shouldn't take a trade on that bar again. So I'm just gonna call. Oh, we already have a boolean called my trigger in there. And my trigger, we're gonna say true. I'm gonna set it to be true to begin with, and then when this happens, my trigger equals true. And then in these, when we enter into a trade, we're gonna say my trigger equals false, so that you won't be able to trade until a new 5-minute bar has happened. And we'll do and my trigger like that. And that should significantly cut down on unnecessary trades where it tries to trade that thing over and over again. We'll see if that helps. Did I get the name of it wrong? Yes. I'm just gonna change it up here. Lowercase m. Bowling. Well, we're doing a Bollinger of range, was what this was all about. Like we're trying to do something that is purely volatility based, essentially. Okay. That is better. Profit factor 0.94. And it gets rid of a lot of superfluous trades, doesn't it? We can change the dev multiplier back down a little bit. Oh, that makes it so much worse, though. That's funny. Ew. It actually was doing okay up to a point, and then bleh. Okay, but maybe now that we have it like that, feeding will be better. Oh, feeding is really bad. Here he is. Only takes 130 off of that, though. Hmm. Now, part of the problem here, though, is like our stop and target is probably smaller than the range, right? Like if our stop was 16, that might change things a lot. Oh, that made it worse. Hmm. Well, so far this has been a real dud. Oh, okay. That one is fine. In fact, in that one we actually seem to be maybe seeing some edge now without fading, but a larger stop. Hmm. Kind of seems like a break-even strategy, though, don't it? Okay, well, this is where now that I think, oh, another thing really quickly here we wanted to test was instead of saying medians, I think you can say weighted. Yep. Okay. And how does that change it? Ooh, it's much worse. That that is very interesting. Why is that one so much worse? Hmm. Sure. We might need to apply some other filters onto it, like don't really necessarily want it to take like outside of the trend, for instance, you know. Um Also let's check um typicals. Typicals is better. Oh, and then we can just close this. We already tested that, but we changed so many other things. Let's just test that one little thing. No, but this one seems to be just fine, huh? Okay, well, by the way, where are we at? We got 10 minutes to the S&P 500 opening. It looks like they've recovered some of that ugly drawbacks. So this one should come out slightly profitable, right? Should be a profit factor of 1. Yes. Okay. And so let's just pin that one and then get rid of all of these, remove all non-pinned. Okay. So now I think we could stand to go and do a little bit of optimization, right? And change the dev period to go between 5 and 100 by fives, and the dev multiplier we could say from 1 to 3 by 0.5, and the target, or no, the stop rather, start from 8 to 64 by 4. That's going to give us a lot of tests, right? But I think we should be able to handle it. 1500. Okay, yeah, I think we're okay. So let's shut down Visual Studio here. So we got the memory. Because it's trying to save all of the results from 1500 different runs is the thing that kills your memory. Okay. Oh, hey. Well, okay. So the ones that are the most profitable do have a I mean, it's not very many trades. Oh my. Wait, so what are the parameters that they use? Okay, so it's not fading. So using a really large stop and is using a really large deviation period as well. Oh, so very, very interesting. So hold on. I mean, for 1 month, that's not bad, right? Oh, I picked the wrong thing. I forget what the Sortino ratio is. Hold on. Well, Sortino ratio might be a great way of doing it still, to be honest. But I was going for max Sharp ratio. Max Sharp ratio. Let's redo that. Like with the initial points, it was kind of dumb, but it was large probably because our deviation period was just way too short. Now that we're including like a larger period, we're starting to get something that looks reasonably effective. And 250 trades over a month would be fine. So now we need to go and run that over a larger data set, right? But I want to probably would prefer to use the Sharpe ratio. 60 move. Mhm. Well, the dollar is definitely moving lower, and the treasuries are definitely moving up. Hmm. Hmm. Okay, so there is the reason I was going for that though was just I wanted to see, what was the most. I wish that there was a better. Um, I wish that Ninja Trader did better optimizations so that you could optimize with the Sharpe ratio, but that it would look for a certain number of trades too. So when we come in here, oh, there's some of these that are really. Oh wait, actually, that one, that one right there looks very promising. That took a lot of trades. Okay, wait, what's the parameters? So using a pretty big stop, and is using a very small deviation period. Wow, really? But it's winning 60. How is it? What the? There's no way. Something's wrong there. Because why is the average losing trade so large? It is. It's including commissions though. But you're right. Commissions are a pretty big part. Oh, how come it isn't showing the commission on that actually? Even though I have it set up to include commissions? Oh, what? Why is it not? I forget. How do you decide which commissions to use in the backtester? It should. Well, so if we take like this one, open in strategy analyzer tab, let's just look at this one in particular. I'm concerned about more than just. See, it has include commission selected, but it's not using it, and I'm not sure what I'm doing that messes that up. But I'm much more concerned by the fact that my average losing trade is larger than my average winning trade when my target is set to 1. So when I come in here and I look at trades and I look at the exit, okay. Oh, I think I know what's going on. Oh, so very curious. Okay. Uh, oh, that's super interesting. Okay, so what is happening is it's getting a signal to get into a different trade too quickly. Uh, I don't know how I feel about that. That's why that makes money. It's risky. Okay, so let's there's an easy way to settle this. Yeah. Let's just go and look at actually let's go hardcore. Let's do January of 2018. We'll run that. Should take a bit. So here's the E-mini starting. A little bit of a buy impulse on the open, but nothing too extreme yet. I'm kind of wondering, like the GDP news is a decently large piece of news, but I don't know. The markets were really quiet overnight. I'm guessing that today is going to be a somewhat lackluster session, but the treasuries have moved back quite a bit so far. So yeah, if you take a lot of trades, you could get a discount. But I want to just use the regular commissions template. But which why is it seems to think that it's not. I must maybe it's the let's see here. Oh yeah, I do. Okay, Sim 101 edit account. Uh that's why. Okay, that'll fix that. We'll come back and redo that back test so that it'll factor in total number of trades. Maybe that one works, but the reason that that one is working is that or this one's working is that it's cutting it short. So if we do it over a 4-year period, I think we're much more likely to see something in these results that is concerning beyond just the commissions. Like that there will be a maximum drawdown that's really scary or something like that. So we should just be patient. Hopefully it didn't crash there. That's something that I hate about NinjaTrader's backtester here is that it doesn't tell you like, okay, I'm still gathering the data, et cetera, et cetera. It's going to take a while for it to download 4 years worth of data, right? On that note, we could probably, if we put like a timer on it, said you're only allowed to be in the trade for X long, and it has like a huge stop. Probably will make money. It's just those drawdowns. You might get into some points where you get really insane drawdowns, right? How long should we give it? How about if at 9:45 Eastern time it's not done, then we'll kill it. In the meantime, let's minimize it, huh? Oh, so yesterday, where were we at yesterday when I was like, I should have gotten in here? No, it was way back. It was way back. It was like one spot or something. They've got a long ways to go. And what we're seeing right here may just be like mean reversion retracement after the news and everything. It really looks to me. Well, another thing is that there was like a pretty big, that GDP number is a relatively large number, and the number did kind of suggest more pressure on the treasuries, and now we're moving up. That kind of says to me that somebody was planning on buying it anyways, and they were just needed that piece of news to get through, right? So what do you think is pushing it here? I'm not sure. I'm not sure. Donald Trump says crypto is dangerous. It could be an explosion like we have never seen before. Oh, that's gonna be an interesting thing in the Donald Trump community. Hold on, they talking about that? When did he say that? Mm, I don't see anything out. It doesn't even find me. I search. Their search is useless. Apparently, their search is useless. I don't see anything about it there yet. Shall we search Reddit? Maybe the cryptocurrency subreddit's picking up on him. Time past 24 hours. Okay, so the cryptocurrency subreddits. Ooh, 175 comments. Okay. I totally forgot about that. Top post, isn't his wife getting into NFTs? Yeah. Makes you wonder. Do they disagree on this? Or are they just trying to suck as much as they can out of it before it crashes? This either is plausible. He's not wrong though. My crypto is gonna explode. Yeah, this is an immense bubble. Also, my wife's NFTs are doing great. Yeah. Of course, he doesn't like crypto. He knows how to game the dollar, live off of debt, and profit from a currency being inflated into oblivion. He doesn't want that to go away. If he could think about blockchain tech, it definitely wouldn't like the immutable record of transactions. Why he's calling Trump an it? That's funny. Did you just assume it's pronoun? If this man had the sense to get into crypto, he'd have the finest shitcoin ever. And my beard is touching me. It's itchy. I said I'd give it until 45, but I'm already like, no. I hope I didn't like kill my RAM there. You guys still with me? Oh, okay. We're okay on memory. We're okay on memory. So instead of trying to go crazy with it, let's just go to the beginning of this year, okay? Can you recharge Energizer's lithium? You can recharge any kind of battery, to be honest. Just not very well. Be careful though, because you put a regular battery into those old recharge style things and it'll just blow the battery up. Most of the comments in this Reddit chain is just garbage, not actually adding anything to the conversation. I wonder if CQG is just being a pill about, oh no, why is my ES not going? I think that CQG is a little unhappy with me. Oh, you know what? This one is not going because I'm downloading the data for it. That's probably what's going on there. Well, that's interesting. Perhaps now Democrats will support crypto just to disagree with what he's saying. The whole thing about does the left or the right like cryptocurrencies more is a really bizarre phenomenon because there's so many people out there, lefties in particular, that really think that cryptocurrency is like a right wing libertarian sort of a thing. But when things started, I did not see it that way. When things started, it was very much a Reddit lefty sort of a thing. And now, based on the last polls that I saw, it's actually pretty even. But could this upset that balance? That could be interesting. Okay, so now this is moving again. So is the back test actually running? Maybe I should put some print statements in the check loops that it will tell me so that I can see output when it's actually starting to backtest. You would think lefty nods. I think in the beginning it was, but now it's pretty even. Oh man. There's also something that I've seen on the right side of the aisle that they're really focused on a lot is Facebook, created an hate speech algorithm, and they found that 90% of hate speech was directed towards white people, and they're really focusing on that. I mean, I'm not surprised, but largely because hate speech directed towards white people isn't really policed, and therefore you're probably more likely to see more of it. If it was policed as heavily as all other hate speech, then maybe you could get like an accurate to see if hate speech against white people really was more common or something. But it was just kind of interesting that they really single in on that one particular story. I've seen it on all of the subreddits. Oh, we got consumer confidence and existing home sales at the top of the hour. Forgot about that. Let's see here. What's Nomura saying on it? Based on the improvement in the University of Michigan's preliminary December survey driven by business conditions, we expect the Conference Board's Consumer Confidence Index to improve 3 points to 112.5. Growing news coverage of the Omicron variant and still high inflationary pressures pose downside risk. Existing home sales, we forecast a 2.8% month-over-month rise in November. Existing home sales to annualized pace of 6.52. Consumer demand for housing has been strong. Low inventory has been limiting growth in sales. Who doesn't know that it's more popular even before the internet was popular was the case? I think probably, but I don't have any data to prove that. Sorry, we're getting a few dropped frames there. Merry Christmas to you all. Oh, thank you very much, Galood. How are you doing? I don't really, if this backtest does not work, I can't even do a uh, a year's worth of data on a 5 second. I'm pretty sure that I can. Uh, so am I getting like bottlenecked here or anything? Yeah. Memory still seems okay. Ninja Trader's using 2 gigs. Hmm. Hmm. Like the thing is that when you do it on a month, it pops out instantly and it's fine. Well, let's come back over here. Let's rerun this now with it should actually show us commissions, right? Include the commissions. Run. They're not gonna let me do that. I clicked the button. Okay, there we go. This is probably unwise, but then keep going. So so Gus was showing me some stuff yesterday. It was really interesting. But like the one of the things that I looked at there was that he was like comparing the volume of the different indexes against each other. And it's like, oh yeah, I really would be useful to watch the indexes against each other. And maybe some kind of arbitrage trades between them would make some sense. It was something that I never really looked as deeply into as probably I should. Like when I started looking at that, I was like, well, like if I'm gonna trade ES, some arbitrage between the indexes, that's probably like one of the first places I should be looking at. Why didn't I? It's kind of harder to do that sort of a thing with the way the Ninja Trader is set up. Okay, so these ones over here though still okay, so it is factoring commissions in now. And when you get into these ones, like yeah, you pay a lot in commissions, but almost you pay almost as much as in commissions as you make in trades. So the profit factor on that is just not very good. I think that what's going on here is that is jumping out of trades too quickly. You wish the stock market would just crash? Why? Why would you say that? S&P 500 is looking pretty good. And the treasuries are coming back a little bit in response. It kind of makes you wonder about the driver and the treasury there. Okay, I really feel like giving up on this. This one at least. For now at least. I want to come in here and I want to include end my trigger and position dot market position, is it? Market position equals market position dot lat. There we go. And that way it will force you to go to the stops. To get the target or the stop. I think that's like from a statistical perspective a more fair test. And it's going to change these results significantly because these ones that are taking a lot of trades aren't going to Where did I get which news? Oh, this stuff about the top of the hour? I was just reading that off of Twitter. It hasn't happened yet. We still got 10 minutes, okay? So let's rerun this. See what we get now. Because if I got one of those that was like really doing 60% with equal risk reward, that would be a pretty significant discovery, wouldn't it? But I'm going to bet that it's not going to be anywhere close to that. If maybe we can get one that's 55% though, that seems like that might be possible. So let's just see. But what news? When I was reading, that was just like the predictions for the news at the top of the hour. So if the NQ moved off of that, it was just random. Not seeing any news or significant changes all morning. It's been really, really quiet day, especially for a Wednesday. Oh, what? Okay, so here's one. This one took even more trades. Da-da-da. Okay, they're roughly equal. Winner versus loser. Just because it's doing a market order to get out. Yeah. Anyways. Takes a lot of trades to tell you that. It's a lot in commissions. But the best you get in a Sharpe ratio is 1.24. Any of those, well, wait, why isn't it sorting it by Sharpe ratio for me? And there's a bunch of these that are kind of more in the 100 range that but these ones up here at the top, like these aren't bad. That right there is not bad. It's a little random. I mean, we definitely need a bigger data set. But the max Sharpe ratio is probably not the best thing. So let's just do max net profit for a moment and see that way. Is there a way to get real-time news? There are some APIs out there that will give you news, but you'd have to be a little bit more specific about what the application that you're trying to build is. Like if you want to have the chart automatically draw something when a piece of news comes out on your chart, I've kind of been looking into that myself, and I haven't really found an API that really sufficiently gave me the information that I needed. Oh my gosh, this is funny. Charles Quintilla retweeting this. Remember that first wave when New York and New Jersey were on fire and everybody was freaking out? Yeah, that's all inside the yellow circle. Oh my gosh, it really is. Like, it's pretty crazy. Hey, now that one's not bad. These two. Both of them. No, what? What? No, hold on. That can't be right. Let's just go to summary. Let's just look at it from the summary. No effing way. Huh. How? What? No. There's no way. Okay. We gotta, okay. How do we do this? That just reeks of bullshit, to be honest with you. Both of these ones at the top. Like, there's no, if I could get this one, if I could get this run right here to work over a 4-year period, then maintain those stats and everything, that would be that would be so significant. I just, that would be like cracking the code, man. But there's no way that that's not going to have some insane drawdown at some point. So I'm just going to go back and do it again. Even though we've been having problems, I'm going to tell it to do a full year, and we just see. Oh, actually, you know what we could do is here at the top we could say print waiting for it to finish building. Open a new strategy analyzer. Now this one should do our print. I'm just going to minimize that one. We're going to come back here and we're going to do all 2021. I keep hearing that compilation ding and thinking, why is my stuff compiling? Yeah. I hear you. I'm just going to put this over here. This little output window. Seems like it should. Hey, what do you got here, Slim? Oh, wait, what? It did it? It did it? Yeah, and it did the whole year. And of course, it was failed. Of course it failed. Oh, wow. So it did really well in December. That's so funny. So do you see that? It did really well in December, but the rest of the year is dismal. I don't think you could get a better example of like curve fitting, right? It worked great on the 1 month when we did the optimization. When you go back and you look at a whole year, it is just absolutely dismal trading. Oh man, that is effing hilarious. Like everything still seems to match up. It's just that win rate just does not stay that way, right? That's pretty nasty. And the drawdown is like insane. Look, it's just geez. Okay, so let's minimize that for a second. See how this news goes. Ooh. Okay. So the existing home sales change was 1.9% versus an expected 3%. So that was under expectations, but consumer confidence 115.8 versus 110. So I would say generally that's pretty good. Could maybe move the treasuries down a little bit. Treasuries are kind of on a downswing here anyways. I don't know if for me that really moves the needle. I think it would take a lot to really make me want to get involved in this market. And I that is not enough. Okay, so that was this one. What about this one right here? Let's try this one. Open a new strategy analyzer. Oh, that was fast. Oh, wow. Salim's showing me a really good trade. Some volume up to 50. Oh, I thought you were complaining about the volume being too loud. Okay, wait. Which one was which now? Okay, so that was that first one. That was this one. Ah, it's the same problem. Look at that. So very interesting. Seems like there's some pretty nasty seasonality to this thing. Yeah? Hold on. What if I do this? First of all, let's get rid of this thing. What if I take the fade? That's a little better. It's a little better. Well, that runs so fast once it has the data that I'm thinking, oh, what's wrong with this one? Did I close my Ninja script output window? Because I can't find it now. There we go. Okay. Did it? Okay. So let's go back to January and optimize on fade and target the stop. Let's not do something so insane, right? Let's use more like 32. Okay. And we'll let that one run. Just a lucky day. That's pretty good. I mean, I guess it's on NQ, so I'd be super stoked if I had gotten that on a day, though. Was it? Yeah, it was a full NQ. So I guess on a full NQ contract, it's not like a huge deal, right? Pretty average, actually, but still. So should check over here. Our dollar, after seeing some initial weakness, kind of came back, and now since the news, it has also been fading. Treasuries kind of tilted a little bit to the downside, but overall pretty constrained here since the news. So I don't know. We got an hour left here. This just looks like the holidays are starting early. Do we get news tomorrow? Do we get news tomorrow? Let's see here. Let's go to Forex Factory. Oh, we get core PCE price index tomorrow. Yeah, that would be an important one at personal income. So we still got news tomorrow to trade. But then Friday is a bank holiday, so we won't be streaming. It's still chugging along there, 157. This is going to take a while though. Right now it's estimating 14 minutes. I think it'll be longer than that, huh? How about we move this out of the way? And I'll just kind of pop these on top of it. Okay. Okay. It's doing its thing. Well, considering how strong of a move up we had, it sure reversed, didn't it? But this again is like, but why? But why? Now, interestingly enough, it took way less volume to move it up than it took to move it down. So one could argue that a large meta order came in, pushing things up, and maybe some correlations were involved in there too, to be honest. But then an opposite trade came in and pushed it down and canceled it out. So the person that was buying was maybe still buying through that and was happy about getting better prices for all we know. But why were they taking that trade? I just can't say. Doesn't seem like there's any fundamental reason that I can see that would suggest that the Treasury should be making any kind of significant moves today. My next thing is to trade news on the book fund. Don't know about those speeches though. Yeah. Dude, when the Federal Reserve, like the Federal Reserve press conference and the ECB press conference, yeah, trading during those times can be awfully sketch. Like if they say something where it's like really clear that that's like a big change in what the market was thinking, then yeah, have at it. Like, but otherwise it often just ends up being a mess because the liquidity is lower and everything. Oh, by the way, I didn't notice. I've been trying to fix my cron job so that our little ticker behind me will, run automatically because I keep forgetting to put it on. And I finally figured out what was wrong with my cron job, and it's working now. And I didn't even notice. That's good though. I need to change it. I need to make it like the whole wall is just one thing of LEDs. Spend like $1,000 on LED panels. Huh? Get rid of the we get rid of the chalkboard and just the whole thing LED panels. And then I can have one of those things like they got at the NASDAQ. I can stand in front of it, show you guys things. Huh? That would be great. A big basically turns it into a big television screen. So they're coming down in the treasury. They're coming down, and we are essentially where we were at the start of the session. So I wonder now. Oh, do you think that they can push the downside? And if they do push the downside, is there going to be some people upset? It sure seems like the kind of setup where that could be that. And the cumulative delta on this down move has been so much stronger than everything else today. A little bit of flattening in the curve, though. I mean, based on the book and remove the dom, it's too intimidating. What do you mean then? What are you calling the book? If it's not the dom, I don't. Oh, you just have me. Are you saying you're talking two separate things? Just we'll have that whole thing, and we won't even be showing the screen or anything like that. It will just be me in front of a big screen. Yeah, I got you. No, it's actually not a bad idea, Nasdaq trader. I have this really strong conflict here with the stream. It's always been from the beginning. We've never like just given in, right? We've always been about order flow and the dom, and I'm there are other traders out there, but there is nobody else even remotely close to live streaming with multiple DOMs up on the screen, and certainly not treasuries. Like there's some guys they'll have an NQ up there or ES up there, and they're mostly looking at the chart, I think, and they're just using the DOM to click to enter into their trades, But there's also this thing that like a lot of people don't understand what's going on in the DOM and are kind of intimidated by it and probably leave because of that. So it's like, do we need to shift things around and make it a little more user friendly? Maybe we could do that. Like it wouldn't be a bad, well, I don't know. It's so difficult because I really want to show the DOM so that I can go back and watch the videos and see what happened, and if I screw up, like figure out what was going on in the flow that maybe I missed, right? So that's why it's like not streaming the order flow is kind of like a no-go for me. But at the same time, it's like if it was just me in front of like a board, like they have at the NASDAQ, we're just watching that, it probably would be more popular. So how can we get the best of both worlds? Oh, you found somebody that does trade off the DOM. They mostly do stocks though. Oh yeah, I actually saw that person. They do they trade stocks with Bookmap. Yeah, I've seen that. Because like the thing that irritates me is that nobody has made a DOM with level aggregation. Like I should be able to say, okay, here I'll do it every tick, and then if I do control scroll wheel, it will zoom out so that it will only show me how much is at each dollar or 10 cents or something like that. And then I could maybe see myself doing it in stocks. Actually, in that kind of a situation, I think I can very much see myself doing it in stocks because I could go and pick a stock that I think is going to move that day and that I know a lot about, and then we could scout the order flow, and there won't be as much competition over an individual issues. I have kind of looked into it, and as far as I can tell, because you guys are delayed and everything else, there's not a problem with streaming it. You know, if maybe it happens that they tell me that I can't do that and I have to stop streaming the DOM, and maybe it goes to a space where it's just my face, or it's just my face in a chart or something like that, you know? That would change things a lot, wouldn't it? Ooh, baby, they're back to the open at 130 spot 19. Are they gonna if they start hitting into 18 half, there could be some chaos here in the treasury market. That could be ugly. But you know, I think that my larger strategy, what I'm kind of going for right now, is like the stream is just the stream, and we're going to do our thing, because the stream is where it's really primarily about me trading and trying to get better at trading, right? And then helping you guys in the process. I think Seth just can't do trade recommendations live, like, hey, buy it here right now. Yeah, well, the thing is a lot of people on the internet are doing things like that and are just fine too. I think the reality is that we're in very much of a gray area where um what is and isn't appropriate to display is they're not sure yet. Because for sure, especially if you know, I was a big stream, like the ability to move the markets could be quite extreme, right? There's some real problems with that. Anyways, but where I'm going is the stream is still just the stream, and the regular content will change. So we have this burst of stuff, right? We're gonna have a video about conditions, right? And that's gonna really be like, that's the main stuff on the DOM. And then I'm gonna start talking about like empirical properties of markets and how you can see those on the DOM. Wow, the S&P 500 is doing some insanity right here. Is that just because my ES was catching up? Must have been. And I don't know if that last one is just going to be one big video, or if I'm going to break that one up, because that could be broken up into 5 parts, right? Where we could really go into like real details about that. If I go deeper into those will be after. So it'll be empirical properties of it'll be trading conditions, empirical properties of markets, the true nature of markets is the big video. That's the one that is like I'm putting too much pressure on myself, but I feel like it needs to be the magnum opus. Like and then maybe we split empirical properties of markets out into 5 separate things, right? So if we work hard, that we should probably have all of those videos done by March or May, right? And then we're going to move back into more general videos. Like at that point, I've given you guys like the really technical stuff that I really think is going to be the most useful to you. And we move the stream back towards what is going to get us the most views. So we'll do some videos like, should you trade, right? Is day trading for you? Preaching to the choir kind of stuff that like beginners will find more useful and will kind of do better in search results. And we'll probably do more videos about hardware and the monitors and stuff like that, right? And we'll do a lot of videos about current happenings in the markets, right? Just like what happened that day, what's going on here. Videos kind of like what Graham Stephan does, right? To try and actually build up the stream part of it better. I think that's the way that we're going to do it. Because when I look at it like the stream itself, there are some people that just have like these insanely, like there are some streams where all they do is show a picture of the S&P 500 chart, and it has tons of viewers, and I don't know if they're view botting or how that is working. But I don't think that that's our stream. Maybe if we get lucky. But, we've had some times where we've gotten lucky and then they don't stick around, right? It's just not what people are looking for. So I don't think that it really makes sense to try and like destroy the stream to try and make the stream more popular. Because maybe in a different world, maybe YouTube changes the algorithm to where streaming is a more viable way to build your audience. Then maybe we adjust. But right now, it just doesn't make sense with the way that the YouTube algorithm works. Oh, hey, it finished. And it does find some strategies that over a year are profitable, but none with a positive Sharpe ratio. Oh, very good. So let's come in here. What's the drawdown? Jeez. The drawdown on that one is pretty big. But look, some of these are doing 52%. Oh, but which one is it that's doing? It is fade. It is fade that works better over this year at least. That is actually not bad at all, is it? Like the profit factor is tiny. The profit factor is 1.08. You need the clickbaits. Yeah, I know, right? If we make a better thumbnail, it may. Shall we look at that? Let's go and look at what's out there. This is good. Like when you come into the summary here, okay, like our average win or loss is equal. That's good. 10 trades per day. That's maybe higher than you want it, but that's pretty good. The probability on these are actually, 6%, 16, 6.3. Now, the maximum drawdown being 30% of your profits, that's a little concerning. But like the overall R squared is like 0.9. And the Sharpe ratio, I want a Sharpe ratio over 1, but a Sharpe ratio of over spot 5 is still like tradable. Is still tradable. I don't know, man. It's like it's not bad. Let me just put it that way. It's not bad. And what was I maximizing, by the way, on that one? Oh, I was max net profit. If that's what I was optimizing on, though, why isn't it sorting by performance? There we go. Ah. This one right here seems to be okay. So what are the parameters? True. 32 tick stop and a 15 period deviation, 1.5 deviation multiplier. Hmm. I mean, it's not much, but like, I don't know if for me, I want to go and put like a ton. Well, actually, so let's look at a couple of other things here. So if we come in here and we do analysis and change the thing from trades to monthly. Yeah. Okay. So we got, oh, wow. This could this could potentially pass a combine. Wait, what's the max drawdown? Oh geez. Ugh. Like you could hit the profit target, but it seems like the drawdowns are too much. Well, we might be able to manage that though. Like, what if I come in and I do things like, okay, so here's a question. If I come in on like a daily basis, is it like there are some days that are just like really crazy bad? Well, there's at least one day that was really bad. News Squawk is talking in my ear here. So when I come over here, should we change gears for a second? I got to think about this one for a second. I think I know what to do. I don't know. I want to talk about this. How much does the thumbnail help for the live trading? So the top one that I get on my search, oh, is Trader TV live? That's funny. We're talking about them, huh? And all he has is a picture of a bull and live. Watch day trading live. Blah 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 blah. Yeah. See, I'm gonna bet though. Like, look, this guy has 226,000 subscribers, right? Day trader, he has 500. Wow, that's actually interesting that this guy has more than Clay Trader does. Like, there's 15 watching us. Oh yeah. But what I want to get to is like, okay, 515. Matt has 38. So Matt has a pretty high subscribers to number of people watching, right? Dim, 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 dim. This guy right here is pretty good too. But he has a live scanner and halt signals, no delay. Okay. It seems to me that live that the thumbnail. Oh, this is not an actual live stream. We need to see who's live streaming right now. Features live. There we go. This guy doesn't tell you how many subscribers he has. Seems to me that like having number of subscribers is a more effective predictor of how many people watch your stream rather than how good your thumbnail is and everything else. The basic gist of it is, if we want more people to watch the stream, we need to make better videos to increase the number of subscribers, essentially. And that's what's going to get us there, and not these other things. Okay, back to this. Okay, I'm going to do something here. I don't want to show everything here, but let's just come in and grab some stuff here. I'm going to show you some code here that's really useful. Oops. No. Copied. I pushed the wrong keybind. Okay. Let's see here. And then we come in here and we're going to add some so basically we're going to add some daily risk management, right? Based on what we got here. So the problem is when you look at like the net profit on a daily basis, okay. But then you look at the max drawdown, like most days are down at least 1,000. You see? So if we were to put a cutoff like 1,500, for instance, how many days would end up being losers? I'm not sure if this is actually going to help the strategy or not, but it tends to help. So we're going to go and we're going to stick it all in here, okay? So then in here, else if state equals state real time. Oh, actually, I don't think I need that already. Yeah. It was in the paste. I don't know what I'm doing. Okay. And then over here, after we do all of this stuff, if it's the first bar of the session, then we're going to reset everything. And then we're going to check our loss limits and everything. And if we're over them, we're gonna quit. We're not gonna run anything. And then here, manage risk and on position update. It can be here. So what this does, manage risk, it says if we're below our limit, then return false, and then that means that this is going to stop trading. And then over here is on position update. So every time that the position changes, then it comes in and it does the calculation. All right. Okay. Another thing I want to check here is if we come back here to the summary, consecutive losers 9. Okay. Oh, it doesn't. There's no way to see that over in here, is there? No, not really. Also, how good is our efficiencies? Oh, actually, yeah, efficiency is not bad. Oh, that's interesting. I've never had a graph that's so varied like that. Well, the ones that do well don't have a lot of adverse excursion. We might be able to play around with, having a crazy target and everything. Okay, well, but I want to move this one to a new strategy analyzer. All right. Oh, I don't think that we need life bars. So that was something for the other one to prevent it from trading within a certain period of the beginning of it. Okay. Come on. Come on. You can do it. There we go. Okay. So now we can come in. Okay, so I set the streak limit to be 8. We might be able to make that a little bit. But the last limit, let's make it fairly generous at the beginning and give us 2,000. And hopefully all that is correct. Well, so you see adding daily management did help in some respects. The total amount that we make, for instance, is better. Um, you can see there's it's a little bit more better of an equity curve. Like we get some good back and forth. But the max drawdown on a daily basis, I'm still getting some that are pretty icky, right? Now, if we came back over here and we did like 1,500, I'm thinking that probably won't look so good, right? That changed the max drawdown a little bit. I'm actually surprised that that didn't change much. What about if we just change the streak limit to like 4? Hmm. Hmm. Wait a second. You kind of have to wonder if this is running correctly. Hmm. Eight and 1,500 seem to work the best. That's very curious. Oh, we could. Don't know if I really want to do that. 1,500 was the best. Okay. Well, that's not helping. Like it's a pretty good strategy, I must say. It really there's really a lot of really um attractive things about it. I kind of wonder though, like that drawdown is just really icky, right? That drawdown is really icky. So now I'm thinking, well, we could try doing things like incorporating R squared and stuff like that. We got about 20 minutes left. I don't know. Like, this is a viable strategy, isn't it? Wouldn't you say? From those numbers. Considering that we're not using order flow in there, it's pretty good. Obviously, we're not getting a Sharpe ratio over 1, but like it's tradable. But it wouldn't be tradable on a combine, would it? We would really need to bring that max drawdown in for us to pass a combine with it. Because you come back over here to the chart. Now, something's not quite. So sometimes there's this whole thing. Hold on, where is it? On position update. This is something that I don't understand what the deal is, but like it's different when you're running it live versus okay. If right here, current P&L plus equals all trade. Oh, double last equals current P&L. Where is it? Or is it up in here? No, it's not up in here. This is all previous trades. Oh, this is the last trade. Yeah, gotcha. Do we even use the market position? Oh, where is it? There's like a spot where like I've changed it and it's like it's changed things in the past. What is it? If current P&L is greater than the loss limit, because it's not actually killing it all the time. So let me come back. Where's my daily limit hit, no new orders. It's just that maybe when it gets hit, maybe there was like a strong move against it or something like that, potentially. Which means that you might need to use like better fill limit or order. No, I don't think that that's it either. See, it's kind of cutting it off, but like there's still these ones like this one right here. What's with this one? 3-8. Imagine, where did it freaking go? There it is. Dun, 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 dun. 3-8. So it does do it, but not before like yeah. Well, here let's just confirm that it's doing it, that it's on the right day and everything. Like it does stop, but not. Okay, so let's try something else here. What if we limit the hours? That one's probably going to take a while. What are you talking about? Because he has transparent emotions. Who are you talking about? You think it's funny when somebody goes on tilt? I don't know if that's really what gets you more viewers on a stream, guys. Well, the S&P 500 looking awfully good today. The treasuries. Yeah, let's come over here and look at this on a volume chart. So the treasuries, they kind of made a look back up there, but got smacked back down. But the ES is looking to extend. So looks like I was correct in saying that this whole like mansion business is probably like faded. Yeah, sure. Because how were they not factoring that in already? It's kind of a little silly, in my opinion. Oh, did the natural gas hit 4? Hold on. Ninja Trader's being uncooperative now. Just it kind of froze. Wow. Oh yeah, there I see it. Up over 4. Well, when we started, it was looking okay. But we were like, can it get back above 4? And it's basically up like 10 cents. It actually doesn't look like that big of a move, but and on relatively speaking, it is, in fact. You know what else is moving today is soybeans. You seen soybeans, man? Soybeans up almost 2%. And then on the indexes, it looks like YM's leading the way. Also, silver making an okay big move today. Well, there it is. Hasn't finished loading the data. It's still trying to load the data. CQG isn't so cooperative with backtesting data. You should have just dumped everything into NQ longs. Yeah, right. Okay, now it's done. Oh, that's so quick. Okay. Remind me what we were testing? I don't. Oh, that's right. We changed the amount of time that we were trading. Okay. Oh, that's terrible. That's terrible. I mean, okay, it's not terrible, but it did not solve any of our problems. Actually, maybe it kind of did. So it just again, on a daily basis, max drawdown. Okay, so it'll limited our max drawdown to $1,500 in a day. And then if we come to a monthly period, now we get to, oh man, but it's still like 5,000. It's interesting, man. It's interesting. It certainly seems viable. Does seem to be better if you're just trading it all the time. It seems like an okay strategy. It just doesn't seem like one that you could trade a combine on. Well, another thing. I'm gonna try one more. Trick. I'm gonna try one more trick here, okay? R squared my R2. Biden is speaking right now, by the way. My R2 equals R squared dev period. And then we can come in here and we can say R2 threshold. Ninja script property public double dev or R2 threshold get set R2 threshold 0.8 equals 0.8 rather. Ding, 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 ding. And my R2 of 0 is less than R2 threshold. We'll try that. Have you ever had luck adding break-even stops in with your exit strategies? No. Actually, so I don't think that people understand the purpose of the break-even stop. So adding a moving a stop to break even makes a lot more sense when you're trading multiple contracts, right? Because I don't think that people realize this. Even a lot of really smart guys out there that know a lot about trading and sizing contracts up, they don't realize that when you're trading multiple contracts and you like have multiple targets above you and then they all stop out at the same spot or something like that, what you're doing is you're taking on more risk. It's the same thing as having a stop larger than your target, right? But having a stop larger than your target is kind of silly. So instead, what you do is you manage the risk by doing it by time, like over time, reducing your risk essentially. So when you're doing that, you essentially want to remove as much risk as you can at the beginning. So taking your first target or two and then moving your stop up to break even helps simply because then at that point, you've caught a runner and you can reduce the amount of risk that you're taking on it, right? But when we're doing something like I'm doing in this strategy right now, where we're just trying to prove that there's maybe perhaps some empirical property of the market, um, you know, moving it to break even almost always makes it worse. So, but essentially, what I'm trying to do here with this strategy is I'm trying to take any kind of like risk management out of it, is essentially. So long. Okay, so that made it take quite a bit less trades. Um, and actually made it worse. Just to confirm here, if I change these, it should be like really terrible, right? What's it based off of again? Oh, we're looking for a, um, we're basically doing Bollinger Bands on range instead of price. So run that again. So what I'm trying to get it to do here is not take trades when there's high autocorrelation in the market. Yeah, see. When you only take it when the autocorrelation is really high, then it's pretty dismal. Of course, a lot less trades, but it's actually it's not that bad, relatively speaking. I mean, it's the profit factor is definitely worse, but it's not terrible. But I don't have my little log down here set up as well as I have the one over here. So here you can see that like the Sharpe ratio just like completely collapsed. So that's correct. So what I'm going to do is now we're going to do a little bit of optimization again. If it'll let me here. Optimization. Okay. No. We want fade to be true. Oh, geez. Base period 15 and 1.5. Okay, so we want this to be 1.5. 1.5. And the deviation period is 15. And the stop was 32. Oh, geez. Stop 32. Okay. Okay. So now that should like do nothing. And then we change this R2 threshold, and I'm just going to go from spot 1 to spot 9, increment by 0.1. And I'm also going to, now we're only going to do that one. So that should only give us 10 runs. If I did it all right. There we go. 9 runs, sorry. Yeah, it's like a range chart. It's like if you go in and you do a Bollinger Band, or where did the chart go? Oh, here it is right here. So if you come in and you do a Bollinger Bands, where um, the mid band is basically the midpoint of the bar, and these deviations are only like one standard deviation away. And then when it goes outside of those bands, we're taking a fade, is what we're doing. But I think that the larger theory that we're trying to get out here is that if you're going to be doing technical analysis, you're probably better off trying to analyze um, volatility, because the stock market has a long term memory. When price moves up, that affects the market. The market remembers that. So it's silly. It's Once you really understand it, it's silly to try and do something like a Bollinger Band where we move up and whatever. We move up, and the mid band is based off of price. That like never works. Well, I shouldn't say like it never works, but there's problems with it, right? So instead, we're trying to make it something that is just like purely based on the volatility. I have a bunch of stuff going through my head right now. I don't know what the deal is. The Bollinger Bands that I have are kind of doing similar things, actually, Kyle. Like, I can change what the mid band and what the deviation's based off of and so forth. But we tried a bunch of different things, and we found that it was the midpoint was what made the big difference. We could go back and try and change it and say that the mid band was the point of control. That would be interesting. But okay, so when we do this, interestingly enough, when we get into performance, oh wait, why is there so many? Oh, because this isn't the right one. This is the right one. Yes. Okay. So when we go into total net profit, it's saying to use an R2 threshold of 0.7. So it should be below 0.7. But oh, and yeah, that did produce the best maximum drawdown. Introducing R squared there does seem to reduce the Sharpe ratio for some reason. I wonder why that is, because this is just better in almost every way. Well, okay, so it has struggled a little bit down through here, but like these, not that one. That's like way better. It's still like 5,000. It's like half. The drawdowns are almost like half of what they were now because we included R squared. Hey. It's not bad. That's actually not bad. So now what we're going to do is going to open this in new strategy analyzer. So I want to test something else here. What's that? Okay, so R2 threshold 0.7. Basically, it's just saying if there's a lot of autocorrelation in the market, you don't take it. Okay. Might go back and change it and try the other way around and do it that way. But no, I want to look at this stop and target thing. I'm going to go back to 8 and 32 and targets 1, 2, 3 by actually let's just go crazy with it and do 1 to 5. Okay. I guess I don't understand, Kyle, how what you have would be really any different from VWAP bands. What you're going to get is VWAP bands with a little bit more, little bit slightly different bands in terms of how far away the bands get. Oh, is it really? 32 and 1. It's just so I think that if we really factored in like range here, that we could really significantly change this. Actually, here, let's just do this. Now let's add into it a simple way of just taking on extra risk. Oh, that actually made it worse. I'm actually surprised there. That's actually really bad. Hmm. Yeah, there we go. It's actually not that much better though. That's weird. It makes the drawdown worse. Hmm. Well, I think the next thing that would make sense, because while we're trading off of volatility, is we could come in and say, what if the stop and the target was based off of the volatility that we're getting at that time? That might make a smaller difference than you might think, though. And clearly, a part of what's going on here is having a 32 tick stop is a big enough of a thing to get what we want, right? Now, another thing that I think we could potentially do in here, I'm just kind of spitballing here. So when I come in here and I look at MFE, for instance, so there are actually a lot of trades. Oh, that's actually really surprising. Is quite a lot of trades that have a decent amount of excursion and still end up being losers. You see all that? And there's a lot that end up being profitable that had a lot move against us too. So like these distributions in MFE and MAE aren't really showing us, what I would normally get. It's a lot more random than it should normally would be. Normally there's like these long tails, and like there's not very many that end up being losers that aren't, and that sort of thing. So what we might want to do is try and add some other filters on top of this. So the R squared, I think, is a really good one. But we could also try using some of our things like uh, like some of these oscillator kind of strategies. What do we call them? It's not an oscillator, but it's like a cycle kind of indicators, to try and say, okay, like you take it, but you don't take it until you get like the next cycle, or you take it, but we're going to put a limit order out there at a certain spot instead of taking it exactly where it is, to try and improve our price and reduce adverse excursion. But how, when you say max distance, how is that different from price? It's still a deviation based on price, right? So let me just go back though. Like the thing that I think is at issue with Bollinger Band type strategies. Yeah, I see the good. Well, here, actually, let me. Mm-hmm. Mm-hmm. Yeah, one of the things with this is that there's lots of things that you can add to a strategy that kind of help, right? Some of these things are kind of cheating. You know what I mean? Like a lot of what retail traders will do and build into their strategies are basically taking on more risk, right? So, for instance, if we can come in and we can do something that, um, takes you out of the trade faster when you're in profit, like we had a little bit earlier, then you get a really high win rate, and you can win because you're taking on risk because of that. But then when you look at the drawdowns, it's not very good, right? But this isn't necessarily, well, I guess it kind of morphed, because at the first we were just trying to say, can we find some empirical um evidence that suggests things about volatility in markets, that we can make some predictions about the volatility of markets based on past data, and this kind of suggests that you can. This suggests that there is a small edge in fading a bar that goes further than what the deviations say that it will. Okay, but so it kind of turned from trying to prove that to, oh, okay, this actually isn't too bad. Now let's try adding stuff into it and see how profitable we can make it. Right? You should at least check before making conclusions. But like, again, the problem that I have here, the thing that I take issue with is the mid band. Does that make more sense if I say it that way? So let's see here. Order flow VWAP. There we go. Let's just add a standard VWAP on there. Okay. Dun, 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 dun. Oh, do we need to add tick replay onto it for their VWAPs to work? I think you might. But it says it's calculating. Okay. So what is at issue here is this midband, right? So you're using VWAP, then your midband is still going to be the same, right? And all these VWAP bands is here's the VWAP, and then here's like a standard deviation away from it based off of the standard deviation of price movement, for instance, right? And that's where I'm saying, like, the price movement itself doesn't work, because basically let me explain it like this, okay? Orders create volatility. The more orders there are, the more volatility you are going to have. And the balance of those orders is going to kind of determine what direction it went and how far it went. All right. But that's kind of a thing that you can't sort out and is inconsistent because of liquidity and everything else. But what we can do is we can come in and we can say there's going to be a certain amount of volatility. And if we're getting volatility that is outside of that amount that we're supposed to see, then we're running into a statistical aberration of some sort. Okay. But that is the volatility itself. Once you start putting in a midband that is like trailing and it's, how far away are we from the midband and everything, you are now taking it away from something that is volatility based, and you're factoring in current price a lot. And what do we know about current price is just like the result, right? And analyzing that doesn't tell you a whole lot about what's going on. So what did I do? How did I deal with that? I literally made the midband be the mid of the bar. And that's it. The middle of the bar. And then, so in order to get above that, you really have to have a deviation in price, right? You really have to have a pretty big deviation from, in terms of increased volatility. I mean, standard deviation of deviation from VWAP does have some interesting properties to it, but I wouldn't call it gold. It's still got a lot of the same kind of problems. Biden's stock was cut short for some reason. That's kind of weird. I didn't realize it's 916. I feel like we've kind of gone over. Yeah, well, we could. I don't even necessarily want to using the VWAP wouldn't make any sense, right? It would be probably the point of control would probably make more sense. I've been avoiding doing that though, because then it's a tick replay. It's a tick replay strategy, right? That's the other thing, is I'm kind of avoiding doing order flow for this. Weight the deviation using volume. Well, Kyle's like, so this is actually a great example here. So hold on. Let me make a new chart here with ES. Dang. I was looking at this the other day. I was like, oh, I might need to change my indicator. I'm not so sure. Okay, so Kyle's model, it uses standard deviation. All right. So they're basically saying, what is the standard deviation of price? What is the standard deviation of volume, right? So let's come back in here and I'm going to add 3 standard deviations. Okay. Well, I'll be 14. Doesn't matter. Okay. This one will be price. This one will be range. Okay. And this one will be volume. Okay. Okay. So now this one is actually a little bit different from what I saw yesterday. It's kind of interesting. Okay. So what is it coming out at? Is like when the volume is high, then you would expect the price to changing a lot, right? And vice versa. So when price moves a lot and there isn't attending volume, that's kind of an aberration, right? That is kind of telling you something about the liquidity conditions that have changed, right? So if you take this standard deviation of volume against this standard deviation of price in the way that the Kyle model does, then essentially what you're left with is a graph of how the impact of orders is changing, right? It's basically graphing how much volume is affecting price. That makes sense. I mean, I know I made a little bit of a jump there, but you know what I mean? But I have done some studies using VWAP. For instance, we found that if you get to like a third deviation away from the VWAP, that you start to get really high probabilities that there's going to be somewhat of a significant pullback, right? But I found those strategies to have issues. What I'm kind of looking at more is just what can I read from the volatility itself, right? So once I know like what the volatility is, then I can come in here and I can say on a 5-minute bar basis, you know, where should I really be trying to get in at? Right? Like, say there was a little bit of an up move here. Maybe 40 minutes ago or so. See this bar right here? So this would have been a potential spot here. Let me try something here. Let me add just so that we can kind of see in here. I'm not even going to do it 1 minute. I'm going to do it like 30 seconds. Okay. 30 seconds. Yeah. Okay. And then these bars, I'm going to data series. Make these multi-period candles. I'll just use the default colors that it comes with. So then now we can move this up into here. Okay, good deal. All right, so now we come back to this right here. Okay. So maybe this isn't a very good example because you can kind of see that it was actually mostly from there. Well, okay. But let's just say that we're here at this point, okay? So here's the midpoint, and we want to come in and say, I want to buy based on volatility. Let me move this over a second. We want to buy. We know at this point that we want to buy just because we have a bias for it, right? What would be actually a good price? Well, at actually good price would be, 46.52, right? And there you can see where it drops below that. So we could, what we can do is we could sit back and we could say, okay, because of other reasons, I want to take a trade. What price do I take? And then I calculate the price that I want to take based on the current volatility, right? And that should help me avoid adverse. It should give me a better position on average based on the research that we did right here. Because what did we find? If you are outside of this deviation just based on the volatility itself, not factoring in price, but just like the range of the bars, then there is a slightly higher probability of you coming back into it, at least over a 1 year period. I guess that's the other thing that we need to get back to. One last thing was on this right here. Yeah, it was this one. That was just 1 year. Can I convince it to do it back to 2018 now? Where's my output window? Clear. Run. Oh, Kyle says, yeah, it does make it's like how stiff is the market? Yeah, sure. But I mean the proper terminology to use is how much impact do orders have in that current market? And the more liquidity there is, the less impact that they're going to have, generally speaking. Well, that's where I'm getting at is like when we go back to our books, you know. What is the name of the platform? Well, so I'm using two platforms. All of the depths of markets that you see, and that you normally see on my screen, that is Jigsaw Day Trader. If you look in the video description, I have a coupon. If you use the coupon, it gives the channel a commission. So we really appreciate it if you use that if you decide to buy Jigsaw. But you can get $100 off on Jigsaw Day Trader. But that's just a DOM. And then for backtesting and everything else, I'm using NinjaTrader 8. I have a video about like CQG versus rhythmic data, and I kind of show you how you can potentially use Jigsaw Day Trader and NinjaTrader 8 together without having to have a full license of NinjaTrader 8 because you're not executing with it. But what I do is I connect NinjaTrader 8 to CQG as my data provider, and then I forward that data to Jigsaw, and then I enter all my orders through Jigsaw. So that's what that's all about. I also have a video called "What is the best day trading software platform?" where I talk about why I like Jigsaw so much. Well, it's still loading data here. While we're waiting, I should minimize this. Minimize this one. Anyways, now the only thing where I'm like, maybe if we incorporate volume into it, it's maybe instead of using the midpoint, use the point of control. That could be really interesting, right? So what is the deviation from the point of control on average on both the buy side and the sell side? Oh, that could make it even more interesting. Because what if you said, okay, here's the point of control, and then on average, what for the bars that the high is above the point of control, what is the deviation of those? And for the bars where the low is below the point of control, like what is the deviation of those? And then you would have bands, you'd have Bollinger bands where the top band and the bottom band would be different and would be based off of how far away they're getting away from like where the majority of the volume is trading. And that might be even better because then we might be identifying liquidity holes and finding how much volatility is in the market and how likely is it to get away from those volatility holes. And then we could do some research about when are you likely to jump out of those liquidity holes and all that. All I have to say is smile. Wow. I need to do better about this stuff in like the video description and stuff. I made a thing for TikTok, like a better link, because I was going and looking at my website stats, like, okay, what it was like the most visited page. And the most visited page was the risk disclosure because people were clicking the risk disclosure link in TikTok and going to that and then not going to the rest of the website. So that's why I went and changed it to a link tree sort of thing. I made my own, but so that should help with the retention on the TikTok side. Actually, I think that should make a noticeable difference. But then the other side of this is that like we do have a couple of really good things for you guys in the video description, right? And of course, yes, the channel does get commissions. You click those links and you purchase those services. But I wouldn't put those in there if they weren't something that I thought was valuable to you. There have been things that, like the combines, for instance, I could probably make a lot of money off of putting affiliate links for combines for you guys. But I'm not a fan of combines, so I don't put that in there, right? And so specifically Jigsaw Day Trader and then Financial Juice News Squawk are two services that I highly, highly recommend. I already told you about what's so great about Jigsaw or some of the resources that I have about Jigsaw where I explain that stuff. On Financial Juice, I have a video about trading the news. And I feel like news is such a well-proven source of edge and something that affects markets. I really think that you're going to have a difficult time day trading futures without having some sort of news source. So whether you're if you really can't afford the $70 a month for financial juice, then use TweetDeck. But you've got to look at that sort of stuff, and so that's why I have that in the video description as well. And then we got like the Discord and all that stuff. The problem with most strategies is they can't adapt to the constant oscillation of price, ranging them, switching to trending. Most traders use the same entry and exits that can't adapt. Well, so I don't know about that one. So like every time that I go in and I try and use a stop and target that is based off of like ATR, for instance, you get it's weird. it doesn't help them basically. Just trying to try and change the stop and target based off of the volatility that you're getting. I haven't been able to find any edge in that, even though many people keep saying that sort of a thing. I think that what happens is they kind of just make an assumption about, they know that like big strategies, they do that sort of a thing. So TweetDeck. So it's an application created by Twitter, tweetdeck.twitter.com. Here, I'll show you. This is TweetDeck. Then I got up here on the screen. So what you can do is it gives you these multiple columns so that you can, so for instance, here I have a list of news squawks and I have a list of, culturally significant traders, right? And the thing that's really useful about TweetDeck is that you will see the tweet come in on TweetDeck immediately, like as soon as posted. So you're still delayed from the news squawks, but these live squawks, they'll give you like the economic numbers or whatever the news is a few seconds after it's read out over the thing. So I really think that having it in your ear and them reading it out is a valuable thing. But if you really can't afford that, TweetDeck is the next best thing, right? So if you're not using TweetDeck, you should put that up there, right? Where are we at now? Oh, okay. Oh my. Now this just gets even more interesting. Oh, that's so weird. Huh. Okay, so when we were doing this before, we were doing a year's worth of data. So do you see it right here? This is this year, right? Isn't that nuts? Obviously, it got creamed in 2020. So that one you can maybe kind of discount a little bit. But even before that, a little questionable. Would a company like Earn to Trade ever trade against you when you were funded? No, I don't think so. I don't know if there's anything preventing them from doing that, but I don't think that it would make much sense to do that. So let's talk about that, actually. You guys got any questions about this or other comments about the strategies? It seems like that there are some aberrations that we can pick out of just range, but trying to trade just off of range itself seems a little bit sketch. Maybe we can try and I think that what I want to do is I want to go back and take some of my other strategies that I feel like give me better entries and try and use the range to put a limit order in. I'm just going to close those. Okay, so like here's the thing is that like a market maker, like especially in a day like today, like if I'm a market maker in the treasury, of course we've had a pretty wide range today, but I'm going to want to, I'm going to want to sell up here and I'm going to want to buy up here. And the whole thing with a market maker is that they're like, They're just providing liquidity, and then if they sell in, if you sell into them, they're at 22. So now they're long some inventory at 22, and then hopefully they're going to get a fill on the sell side at 22.5 to make the tick or whatever the deal is, right? And as the market maker, you're going to be looking at what people are doing to make your decisions. So if, for instance, everybody's going short, let's just say today it's a range day, right? So I guess short isn't the right one. It's everybody's going long. There's been a lot of longs. Okay, he's going to be taking fills off of this, and what he's going to want to do is he's going to want to be careful about how much liquidity he's going to put on the bid side, because if he's short, he wants it to come back down, right? So he's going to make it like he's going to take his fills here. He's going to get his one tick, but he's also going to make it so that it's easier for market orders to move down than it is to move up, right? And that's how the market maker kind of screws you over, is that they manipulate the liquidity because they're the ones providing it. They manipulate the liquidity so that it's more likely to move against you just based off of randomness, right? That's why, like, truly the only way that I see to make money is that you have to have an edge. You have to have something that really truly predicts which way it's going to go. And something like what we were looking at there, where like you have a 52% chance of winning versus losing, probably not it. That's not like, especially just over a year, it's not a big enough data set, and we can see how when we did that over 4 years, it was terrible. It was just absolutely terrible. It was maybe what we thought we had learned about volatility isn't true. That we can find some statistical aberrations in it. Maybe it was all just curve fitting. Who would call me from California? That making sense. Anyways, so you really want like a piece of news that nobody else knows, that's not factored into the market. That would be like a real edge, right? And then you can beat the market maker at that game, because you know that that more people are gonna come in after you, and the market maker is gonna have to adjust to that and say, oh, okay, I'm getting more volume than what I should expect. This suggests that there's a possibility of informed trading, and so I need to pull my offers on here. And now all of a sudden the market maker is kind of working in your favor because he's pulling his orders, and it's making it easier for price to go in your direction, right? So from the perspective of like earn to trade, or even frankly your broker like trading against you, uh, there's like, your trading is basically going to be random. Like obviously brokers don't do this. There's rules against doing this sort of a thing. We actually had a discussion about it, and I was like, well, I can't prove that it's not. But then I talked to a broker, and they showed me some stuff that basically showed that they weren't allowed to do that stuff. Okay, so let's just say that you were a broker and you wanted to trade against all of your clients. Well, the net effect of your clients is going to be random, even though like they're losing money. That's going to be random. So doing the opposite of their trades isn't going to make them money. It's still just going to be random. The opposite of random is still random, right? You made 9K today, really? Well, maybe I guess if you were long ES, yeah, that might make sense. I was about to be like, but then I realized, oh yeah, except for that the S&P 500 has been trending up pretty good today. Makes sense. Yeah. I don't know. Volatility is an empirical property of markets, but I think that we need to do a little bit more research about how we can possibly factor it in better. Forex Live says, should we be concerned about Biden getting COVID? Mm, I still think that if Biden gets COVID, that he lives. But especially if he got Omicron, I think that he would. All right, guys, I'm over my time. I need to, what was I going to do today? Oh yeah, I was going to try and watch some videos about machine learning and stuff. Nope. To pass earn to trade, can't you just have two accounts and go in the opposite direction at any price? Sacrifice one account to pass the other? No. Because again, the opposite of random is still random. So if you go back earlier in the stream, we were testing a strategy and we were like, okay, what if we did the opposite of that? And you could see the opposite of that didn't make money either. It was just, it actually lost even more. Right. So kind of part of it depends on like your stop and target and everything. Like if you really truly baited every trade of the opposite one, then you're going to have a situation where this one is going to make a trade where it loses really big, and this one is going to make a trade where it wins really big, right? But then this one that lost really big, it's blown the combine because it broke its risk parameters, right? So because of the risk parameters, because of like daily loss limits and all of those sorts of things, that's never going to work. Probably if you really wanted to pass a combine easy, probably the best way to do it would be to come in and just take 2 contracts long on ES at the open and try and hold it the whole session. And if you get stopped out of your trade, reset the combine and do that, every day for like 2 weeks. And then you would probably get a day where you would make enough. And then the rest of the combine, just only trade like 1 micro contract and take a tick so that you have days. You might have to do that a couple more days. I don't know. I'm just saying you can catch winners in ES. You can get really good long winners, right? And that's probably one of your best chances. But again, just remember, the trading the opposite of a random strategy is still random, so that you can be taking the exact opposite entries and both lose. Largely because of how volatility works. Right? Well, anyways, so I was going to get going, wasn't I? GDP. I'm going to say markets unmoved by GDP and consumer sentiments. This is just kind of a quiet day. But I mean, the S&P 500 did move up, but I don't think that had anything to do with the news. And when you look at like what the treasuries are doing and everything, treasuries are still in a period of excessive volatility. But it was, I still say it's kind of quiet, and that the reason the S&P 500 is moving up is probably because of gamma squeeze. Do you have anything that can be used to understand just like other than jigsaws telling you where you are in the queue? I don't know. There you go. Study one market, know it, learn it, like Seth knows his bonds. Yeah. Well, LAFTA, I've never seen your name before. Wait, actually, yes, I have. Who are you? Who are you? What was your name before? Now I'm all suspicious. I was like, wait, that's somebody that we know, but they've changed their name. Oh, it's Lewis. Oh, okay. Okay, yeah. So then you already know. I was going to give the whole big speech about like, well, it's easier to find informational inefficiencies. Anyways, guys, I got to get going. I will see you tomorrow, last day, Thursday, right? And then we're going to take a break. We're going to take a week-long break. So I will see you guys tomorrow. In the meantime, stay